What is going on, YouTube family? Welcome back to another episode of Nasdaq100 analysis, and we're going to be talking about some of the moves that took place last week and how we can best navigate them, right? As well as the new tool that I'm now using from TradingView that may be of interest, right? So I'm going to cover that as well. And also, I believe you are going to find the content I'm going to be sharing with you today super useful. So make sure you hit the subscribe button, turn on the notification, and drop us a like. So now, before we get into all of that, let's just turn on all the little gizmos that we now like to use, right? So the first things first is we're going to turn on volume profile. So let's wait for that to populate the charts. There we are. Everything is all there. Very, very, very nice. Fantastic. So now the next thing that I'm now going to do is I'm going to talk about one of the key things that took place last week and how we could have navigated that if you was trading my style. Now, once again, I'm not a financial advisor. I'm not giving you financial advice. This is the style that I use. You can use it to benefit you as well, but remember, you take responsibilities for everything that happens in terms of how you navigate the market, because I am not a financial advisor, and this channel is purely based for me to showcase how I like to navigate the market, right? It's not here to tell you what to do in the market. That's very important that you know that. So with all of that covered, let's get straight into it. So last week I talked about the weekly highs and the weekly lows, and I actually set some levels for them, right? So this is it right here. At the end of this video, you will obviously be able to click the thumbnail that appears to go back and watch the previous week's video, right? Just so that you know some of the signals that I talk about on this channel, okay? It is grounded in solid research and understanding, hence why sometimes a lot of the stuff that I say happens in a way that I said it does, and then obviously you're able to take advantage of it. But you also got to be careful how you take advantage of it, right? Because sometimes it can go wrong, as clearly seen here on the Friday move. So last week I basically turned around and said that I believe that market had a high probability of coming down supposing to going up, right? I believed it was going to close below the weekly low, and it did. We got that move on the Thursday. So let me get rid of this, right? So we got that move on the Thursday. So on a Thursday was when we actually got the close below the previous week's low. So that was this level right here, right? So we took it out right here, and then obviously it opened up. So if you had seen that, right, you could have jumped in with a sell, right? And then that would have done you very, very, very well for most of Friday. But however, during the later part of the Friday, you'd have got caught slipping, and that was the move that took place up here, right? So with that covered, we're going to get into where I think market is going to go this week and how I plan to navigate that. So let's get rid of that. Let's get rid of that. Okay, and let's take a look to see what we got going on. So first things first, we have the weekly high that was set for us on Tuesday, right? So that's the weekly high right here. And then we have the weekly low that was set for us on Friday. That's this level right here. That's this level right here. So this is assign labels to that so it really pops. So we have weekly high, and then we have weekly low, right? And the same rules that I like to go by is if any of these levels are taken out, I am looking for a move in that corresponding direction. So last week the low was taken out, so I was looking for sales, right? That's how this whole thing works. If the upside is taken out, then we're looking for buys, right? So on the buy side, if price closes above 18929.7, we're looking for buys. And if price closes below 18196.1, we're looking for sales, right? In between that, at the beginning of next week, right? At the beginning of next week, so let's just say Monday the 3rd, right? If we see a move kind of like this, where price closes above the high of the Friday, okay, right? You can decide if you're going to enter the market on a buy or if you're going to wait to see if a major level is taken out. And the major level in my case would be either the weekly low or the weekly high. These are the two levels that I'll be looking for to be taken out in order for me to make a decision as to what it is I'm going to do. But however, if this level is taken out, price continues to push up, then you can obviously jump in on the buy side. Once again, not financial advice, okay? And you can target this level right here as your TP, okay, right? And if it goes past this level, then it's only fair to assume that it's going to be pushing upwards. If it stays below it, then you might want to bring in a trailing stop to lock in all that you've gained so far, so that if it does begin to reverse, you're not caught holding the bag, right? And then naturally, if it does bounce from this level and it closes below the weekly low, then there is a high probability it's going to be going downwards. And how I will approach this situation if it closes below the weekly low is one or two things. The first one is the worst one, but however, sometimes you got to do what you got to do. So the first move is, as soon as it closes below the weekly low, I enter in with a sell, and obviously I target this area up here with my stop. That there could be a very terrible move, because for example, there is a high probability that price will pull back, right, and now be held in drawdown for a little while before it comes back down again, if it comes back down again, right? What you could also do is you could wait for it to close below, push all the way up, lock in your position, right, or come in with a pending order, however way you want to do it, right, and then let it drop all the way back down again and cross the previous weekly low for the second time, if it works out that way, right? And then obviously you ride it all the way down and you collect all of those awesome pips and all of those awesome points. Do you know what I mean? So that's the plan for next week commencing the 3rd of June. That's how I plan to navigate the whole situation. I'm waiting for one of these levels to be taken out before I absolutely commit myself to a trade. Okay, so with that now all covered, we're now going to get into the business of what I wanted to show you, which is a new tool that TradingView has released on their platform, right? So this tool that TradingView has released on their platform is quite popular with professional traders. They tend to use this tool a fair bit. They tend to sing its praises, in all fairness, right? Yeah, all the bells and whistles are going off about this particular tool. They talk about it all the time, and that was the best thing since the invention of the wheel, right? So TradingView has now brought this onto their platform. Prior to this, you would have to find an external source to get this particular tool, but they've brought it onto the platform, but it does require you to have a premium account, right? So the tool that I'm talking about is this one right here, which is volume footprint chart. So let's wait for it to populate. Here we are, boom. This is it right here, volume footprint chart. Now, if I zoom in closer, you're gonna see exactly what I mean. Right, so what volume footprint chart actually does is that it shows you all the active trades in the market. So this is not pending orders, these are active orders in the market, right? Executed in the market. So market buys or pending orders that have been triggered, but these are all active orders in the market, and we can see all of the positions that people have in the market right now. So I've been using it for a week and I've been getting mixed results, right? So at the moment, I can't come back to you and tell you that this thing is the best thing since the invention of the wheel, because I've only been playing around with it for a week. So I can't really say that to you, right? But however, it is interesting how everything behaves. So what I'm going to do is I'm going to give you a really brief run through as to how this overall tool actually works, right? And then if you are really interested, there is a link, which is an affiliate link. It's always been there, it's in all of my videos, right? And it's a link to TradingView. Now, if you use that link, what will happen is you will be able to get this tool, right, for free for 30 days, right? After the 30 days, if it makes sense, naturally you keep it. If it doesn't make sense, then obviously you don't. And depending on where you are in the world, right, it could be really, really, really expensive due to currency fluctuation and currency difference. So I'm aware of all of that, right? But however, because I can say you can have this free for 30 days, I'm going to recommend it, right? But however, it does require work. It's not really, it's simple to understand, but then again, at the same time, it's not simple to understand, right? So I'll give you the run through now, right? Because I've actually looked into this a fair bit before I got it. So I kind of understand how to kind of navigate everything I'm seeing on the screen. So first things first is within a candle. So let's just use this candle for example. Within this candle, so this is the candle right here, right? This is the candle right here, right? And on the left side is all the sellers. So all the sellers are here and all the buyers are here, right? And at the bottom is you have the total amount of total amount traded of that day, as well as who is in control of the market. So if you have a negative delta, so let me just zoom this, make this a bit bigger, right? So if you have a negative delta, so this number right here is red, then that basically means the sellers are in control. There are more sellers than there are buyers. If the delta is positive, it means there are more buyers than there are sellers. So in this red candle, believe it or not, there's more buyers in this candle than there are sellers, right? Because all of the sellers are here. They locked in all their sales here, right? And then they locked it in, riding down, right? And all the buyers are trapped here, right? And there is more of them trying to bounce the market back upwards again. But these guys are all trapped. They're all trapped, right? They're all locked in. And and all the sellers are, everything is working out for them. And obviously all the sellers are, there isn't so many of them because they're already in. Okay, so that's that, right? Now, how you're supposed to use this, or how I understand how you're supposed to use this, if you're just using this data blindly without major technical analysis going involved, which is most of the stuff we talk about in the previous videos, right, is that apparently you can just use these numbers to actually navigate the market. So for example, in this situation over here, you can see that we have a green delta. So we have a positive for 388 buyers against sellers, right? So there's more buyers in here than there are sellers, right? So if you was to buy this next candle, right, there was a high probability price was going to push up, and indeed it did, right? So you've got a positive delta. The sellers are aggressively trying to push it down. They do take control of the market, but they don't control it enough. Then on the next candle, once again, the sellers are aggressively trying to push the market down, but however, they are not able to take control of the market. So price continues to push up. And then eventually price gets all the way to the top side and it all works out. And then what happens, the sellers are then able to gain control of the market on this one, because then we have a negative 382 delta, which essentially means the sellers have taken control of this. And the difference between the numbers from this one over here, so this push to the upside, and this over here means that this candle should be treated very, very, very seriously, because they've literally taken it over. Although it's not as high as over 1,000, right? It's high enough for price to begin to push downwards. And then on the next candle, we can see that price indeed pushes downwards and the buyers have taken control, but it's weak, right? Because it's 336 and it needs to be a lot more for price to actually push upwards. So this needed to be about 500 in order for price to continue to push upwards. So the buyers did have control, but the move had already been set in place, because the sellers at this level right here overwhelmed the buyers at this number over here. So over here, the negative delta is 382. The positive delta on this right here is 336, right? So this particular red candle up here is still in the lead. So we're still dominating this one. Hence why the buyers were unable to push price upwards. The following candle that appears is what kind of pretty much sealed the fate. So essentially, you have 650 negative delta taking sales. Buyers do not have a hope in hell. Price is going to be coming downwards. Then the buyers then begin to take control of the market, because at this level, all of the sellers are jumping out. At this level, all the sellers are jumping out. They're taking their profits and they're all jumping out. So that gives us a positive of 120 positive delta to the upside. And as you can see, the buyers then begin to take control. The buyers take control some more. Then naturally, it then boop, flies up. All the buyers are in at this level, 1,366. And then it flies all the way to the upside, right? So this is how this tool essentially works. And once again, like I said, there is a link in the description. You can get it free for 30 days, right? And you can try out and see if it works for you. Now, there is one thing that I will say which is super important. this is not a silver bullet. This still requires work. I kid you not, my friends. This still requires work. How I've explained it is super simple. It's like, oh, that's really easy. I'm going to be printing cash. No. This is the markets we're talking about. And it is never that simple, right? But however, if you want to test it out yourself, maybe on the Forex market, okay, you do 0.001 lot. If you can get that low, right? You could try it out on there and see if it all makes sense. And if you're getting more wins than losses, then by the end of the 30 day of the free trial, guess what? Just get it, right? So I just wanted to show that to you. So I'll be using this for the next couple of months to help me with my trades, right? And yeah, but I don't think I'm going to be bringing this on the technical analysis videos to be showing you this, because there's some people that don't have it and I don't want to be rubbing anything in anyone's face, right? So if you do decide to get it, then get it. If you don't, then don't. But I've tried this out. I'm getting mixed results, right? I am getting mixed results. We're getting wins and losses. But in all, I still think I still need to play around a lot longer before I can come up with a concrete decision as to if this is going to be a keeper or if I'm going to be ditching it, right? So finally, if you want to watch my previous video on some of the moves that I talked about that actually took place this week just gone, then you're going to be seeing a thumbnail at the end of this video, so make sure you click on that and give that a watch. Also as well, if you're struggling with the whole concept of weekly highs, weekly lows, then check out my backtesting videos. There might be some gems in there for you as well. So with all of that covered, my awesome people from all around the world, I want to thank you for coming over to watch another episode of Nas100 Analysis, and I look forward to seeing you in the next video, which will be very, very soon. So for now, this is Pips and Points signing out.